Hey, welcome back. My name is Jed Barker. I'm a local mortgage officer right here in Greenville, South Carolina. Today I'm looking at renting a home versus buying a home right now in 2019, right here in Greenville, South Carolina. So stick around if you want to take a look at the calculator, rent versus buy, right here, right now. Hey, welcome back. My name is Jed Barker. Like I said, I'm a local loan officer right here in Greenville, South Carolina. Today I'm looking at renting versus buying a home right here locally in 2019. What is the financial impact one will have on your family versus the other? Now, there's a lot of reasons to buy a home, over and above, basic numbers, calculations. And those are things you want to consider too, such as, what is it going to do for my family to be in a home, to buy a home versus rent a home? I'm not going to talk a lot about that today because I'm going to stick to rent versus buy calculations so you can take the emotions out of it for a minute and not have the emotions driving you to make the decision. But let's look at the numbers first to see what makes the most financial sense for my family, myself personally. Should I be renting a home? Should I be buying a home? How does that affect me and my finances today and over the next 10 to 15 years if I choose to buy a home now versus staying renting? So that's what we'll look at today as we get into it, the rent versus buy calculator. Okay, so I think what we might want to do is just take a look at some basic numbers on the rent versus buy calculator so we can go ahead and input those numbers into the calculation properly. So I'll show you how to use the rent versus buy calculations. But in order to do this, we do need some basic numbers for, what does rent cost now right here in the local area. So if you take a look, we're going to use Simpsonville, South Carolina, which is just real close to Greenville here, as some numbers to look at for average rent or median rental prices. Take a look at Simpsonville. This is the average rent. You see that the average rent in the area, just over $1,000 a month, so $1,025. For a rental. And what does that rent, or what does that give us? So if you look at this, that's a rental size of apartment of 1,012 square feet for just over $1,000 a month in rent. And take a look at this. This is interesting. Year over year change in rental prices. So rental prices right now, year over year in the area, are going up 6% a year is what this website is telling us. And this is called rentcafe.com. As far as that goes, they have some good information on here for rents all over the country. If we scroll up just a little bit, you're going to see that 50% of people that rent homes or apartments, this is really apartments in the area, so homes are going to be probably more than that, I would assume. But 50% of the people who are renting apartments are paying between $1,000 and $1,500 a month. 46% are paying between $700 and $1,000. And there's 4% of our population who are paying between $1,500 and $2,000 for an apartment rental. If you just keep scrolling down, you see the trends in rent are going up, not down, obviously. And on this cool website, you could look at different areas such as Greenville, Malden, Simpsonville, Five Forks. Interesting to note, Simpsonville area and Greenville, Malden, they're all very similar in rentals. So whether or not we're talking about renting here in Greenville or Simpsonville, Malden, Five Forks, very, very similar. And so is the year-over-year changes, in those areas. Very similar as well if you take a look at that, 6%, 6%. So the rents are increasing, year-over-year, obviously we know that, and the average prices. So let's flip over and take a look at another website real quick. This is rent.com. So, look at all these blue spots here on the screen. Obviously lots of rental choices, things to rent. Take a look at the prices here. So this is a 4-bedroom, 2-bath home in Greenville, renting right now for $1,995. This is a 4-bedroom, 2-bath house in Greenville, renting for $1,850. So those are homes. If we scroll up a little more, there's an apartment, 1 to 3 bedrooms. So you obviously will put the 1-bedroom price on here, but a 1-bedroom right now renting for $875 in Ardmore at the park. So that's interesting to note. And a 3-bedroom in there, I believe, renting for about $1,200 to $1,300 as far as that goes. And if you keep scrolling down, you keep seeing all the rental prices for homes, and you can go look at the rental prices for apartments as well. So, the average prices, we're going to work with today on our calculations. I believe for a 3-bedroom, and we're going to work at $1,300 for a price for renting. Okay, so let's flip over, take a look at the calculations as far as that goes. So this is the rent versus buy calculator that I use to help my clients, look at the long-term aspect of renting versus the long-term aspect of buying. What is going to get them more ahead financially for them and their family? Are they going to be further ahead if they stay renting for the next 5-10 years, or further ahead buying? And what are those real numbers? What I want to do is get those real numbers right up in our faces so we can look at that and just look at numbers side by side. So what we're going to do, take a look at this number here. We're going to put a rental value of $1,350. That's the cost to rent that 2-bedroom, 3-bedroom apartment or home. Although in a home, I believe it's going to be a little bit more than that, but that's a good value there. And we're going to look at a purchase price. Now I'm going to go ahead and, for the calculation's sake, put a purchase price of $176,300. I think that's a fair median first-time homeowner price here in the area. Obviously, it can be a little lower than that or a little bit more, depending on your preference of where you want to live, how big, what nice a shape it's in and stuff like that. Is it going to be a fixer-upper or not? But I think that's a great, fair assessment of that first-time home. So $176,300. The next thing we want to look at is a down payment. So for this calculation in this tool, we're going to use a 3% down payment, which is this number right here. That's your down payment. How much down payment do I need to own a home? As little as 3% down, in most situations to own a home. So that could be a very low amount. The next thing we want to look at is total closing costs. So we're going to take a look at, what does it really cost to purchase a home versus renting a home? And we're going to take a value of about $3,500 in closing costs, things like taxes and insurance. Also, things such as attorney and title fees, basic closing costs. So closing costs on a home of this value, starter home, somewhere around 2 to 2.5% of purchase price should pay for all of your closing costs. As we keep on going down a little bit further, you're going to see your mortgage balance of $171,000. That's your mortgage purchase price minus your down payment. So that's your mortgage balance. I'm going to put an interest rate here. So look at that, interest rate of 4.5%. I think that's a fair assessment on a home of 3% down for interest rate right now. And then obviously you also have mortgage insurance. This one right here is your mortgage insurance. We have some great mortgage insurance pricing here at my company. So we're going to put a mortgage insurance price of about $42.75 a month for your mortgage insurance. And then let's take a look at property taxes. The assessment is $85 in taxes a month, property insurance of $75 a month, monthly association dues, if there were some, we're going to do $45 a month, which works out to about just over $400 or $500 a year in monthly HOA dues. And if we go down further to the assumptions, we're going to say that the house you purchase is going to appreciate at 3.5% a year, although our annual appreciation has been doing better than that. But that's a good fair value for appreciation. And we're going to do a hold time of 10 years. So what do these numbers look like if you hold this home for 10 years as opposed to renting for 10 years? Okay. I'm also going to go a little step further and say, if I didn't buy a home, this line right here at the bottom, if I did not buy a home and I took the money I would have spent on the home purchase and invested that into something simple like the stock market, an ETF in the stock market that gave me a 6.57% interest, such as Vanguard stock for the S&P 500, something like that. And I think that's a fair assessment of what you could expect. So those are the things we're going to look at in this assessment. Let's go ahead and run the calculator right now, and let's take a look at what it shows us. This should be exciting. So if we rent, we're going to have a monthly rent of $1,350. If we purchase a home at $176 with 3% down, we're going to take a look at over here. If you can see over here, I'm going to highlight this. See this thing floating around here on the side, this required cash to close. I'm going to scroll it up. If you purchase, it says you're going to have about $8,789 to purchase that home. That would be required down payment and closing costs. If you decide not to purchase, You could need as much as about $2,700 to rent to start off. That would be things such as your first and last month's payment. Although you could need more than that. You might need to have a damage deposit and other things like that. So it could be a little higher than that. But if you're in a home right now, you won't have all those expenses if you're in a rental. So take a look at that. That is a required cash to close. If we take all these numbers and just quickly throw them in that rent calculator, your total, if you look here in the middle of the screen, your total cost per month, adding in all of your housing expenses for your insurance, taxes, principals, and interest, is going to come out roughly to about $1,114 a month. Where renting that same 2-3 bedroom home or apartment could cost you as much or more as $1,350 a month. So immediately we're already getting savings per month just on purchasing right now. Because of interest rates and home values versus how much rent's going up, it is less expensive to purchase than to rent right now in our market. So we're saving hundreds of dollars a month right now just on that. So if we go up here, that's what this box here tells us. It's cheaper. In a lot of situations, are less expensive for us to buy and pay all the monthly mortgage, principal, interest, and taxes than it would be to rent. So it's very interesting there. If we go down, obviously we know it's going to cost us something to buy. So that $8,789 is going to be a cost to us to buy versus renting. We're not going to have that big expense, right up front to buy a home to invest in. If we keep scrolling down, what's our future value of our asset? So if we buy a home in 10 years, we will have an asset that is worth a certain amount of money. This figure right here, this $86,856 figure, that's not how much your home is worth at that point. It's actually worth quite a bit more, but that is how much equity you have in that home now after 10 years. So that is how much money you could say you have in the bank of your home that you have built wealth for your family, is over $86,000 by making your mortgage payment every month and by letting the home appreciate in value over that 10 years. So that's a pretty huge amount of savings. Imagine how long would it take you right now to save $86,000 having to pay rent and putting the extra money away just to save $86,000. If you rent a home as opposed to purchase, and you take the money you would have spent on the down payment and the closing costs and invested it over that 10-year period, you'd have a total of about $11,600 if you take a look at this little screen right here. So you have $11,000 if you stay renting, over $86,000 if you stay owning in equity. That's after the net proceeds of selling the home. So the home obviously is worth quite a bit more than that because that's only your equity, okay? So if you keep going down to the purple on the bottom here, the purple shows us that after all expenses, if you were to sell that home after 10 years in a 3.5% appreciation market, which it could be more than that, obviously it could be less, but I don't think so. I think that's a pretty modest appreciation. We're going to have over $75,000 in wealth created for our family as opposed to paying rent without paying any more than if we would just stay renting. So in my opinion, if you take a look at the numbers, take emotion completely out of the picture, it is far better for your family to consider buying versus renting, just for the simple fact that you'll be so much further ahead if you buy financially for your family than you will be for renting, okay? I'm going to flip this around and we'll talk more when I'm on the screen here. Well, the really cool thing about the calculation that we did today is we can take any numbers we want, for any home value, plug them into the calculations, and actually see side by side from renting to buying, where am I going to be, where's my family going to be in 5, 10, 15 years plus if we continue renting or if we take that step and prepare ourselves for home ownership. We can look at that. We can put the side by side on the rent versus purchase. What I'm available to do for you and for everyone watching is I can take your numbers, you can send them to me via email, you can personal message me, you can give me a call, you can share your numbers with me, such as this is what I'm paying right now for rent, this is the type of home I'd like to purchase, and let's put those side by side to see exactly where I'll be right now, a side by side comparison, rent versus buy, 5 years, 10 years, 15 years from now. Let's compare them to see where it is and how much wealth generation I will be able to produce for my family versus one or the other. All right, well, I hope you've enjoyed the content today for the rent versus buy calculations. I hope it's been enjoyable for you. Please remember you can share, give me a phone call, text, email, share that information with me, those simple calculations, and I can do those calculations for you. I'm posting new content on my channel all about purchasing a home through home loans every Monday. So if you like the content that you see and you want to come back for more, please come back following Monday. Take a look at the new updates. Maybe consider subscribing to the channel, turning on the little ring-a-ling there to get notified, and sharing it with your friends if you think this would be something they'd be interested in too. But have a great week.